Yes, a very good morning, everyone. Welcome to this session. For those of you that have been in the lobby waiting, we are very sorry for that delay, but we shall be kicking off in just a minute or two. In the meantime, I would like to remind you guys that whatever I offer here is not financial advice, but basically analysis that you can be able to use in your trading endeavors to be able to supplement your analysis or to just give you an idea on definitely what's going on within the markets. So as you all know, sorry, just shortly, shout out to Robert Cavale for being the first on the waiting bench. My apologies for the delay. But just in a minute, wait for a few more people to join in on our session. Then we can get on with the technicals. So today is an entirely technical Tuesday. Once again, I would still like to remind you that trading financial assets is highly risky and can result into loss of money. So please endeavor to do the right amount of risk management. That is very, very important in order for you to be able, um, to stay safe and protect your money at the end of the day. So that's very, very important. So as I said earlier, we don't really have any major news events coming in today. Though you have to keep in mind that during this week, we shall be having the CPI. The CPI report will be coming out. And basically, the CPI is a measure of inflation in the United States economy. So be sure to watch out for that later during the week. All right. So other than that, it's a technical Tuesday, so we are going to be entirely focused on what the technical aspect of the market is looking like today, and see where we can probably be able to pick a dollar or two within the day. So I think, as usual, we're going to go with an index or the dollar index. And for those of you on FX Pesa, of course, it's a USD index that replicates what the US dollar actually is looking like. So let me just get this chart shift. All right, so let's look at this from a daily perspective first, then we shall try to break out what the US dollar is likely going to do. So as much as there are no major news events going through the day, we definitely know that Trump will be speaking later on in the day. That will be 11 p.m. East African time. So the markets may be a bit tricky, especially in the New York session, when we are actually waiting for Trump's speech. You all know that in the Trump economy, he's the mastermind of the markets, and the markets tend to react to what he has to say. And probably we might have a bit of volatility or even a consolidation on worst case scenarios when it comes to the New York session. So when you look at the DXY or the dollar index, we do have a supply zone over here that led to a minor break of structure. Why we call it minor is because we didn't really see any kind of serious momentum on how price closes. It just closes at this week here. This week it fails to probably break below this, and when price comes back again, it just rejects this area, showing you that this is a strong level or a strong a support level. So when you try to extend this line, you realize there's a level that has been similar to that on the left hand side, not so far from that. So this becomes a whole support zone. So showing that price has failed to close below this area or break below it first twice and rejected it beautifully. That means that price is probably trying to pick up some liquidity, and now we are seeing that price has come back to this same supply level on the daily time frame. It's possibly trying the rejection. So in such scenarios, what you want to watch for is that you can clearly understand that this whole area here is some kind of consolidation. It's a consolidation on a daily time frame, because we have seen that 1, 2, 3, 4, 5, 6 days have failed to either break above or break below this resistance and this support level, meaning that this whole area is not an area you really love to probably take trades, right? It's not the best possible area for you to take trades. What you would really love to see is either price breaks above and we see the dollar are regaining back its strength to probably push on or continue higher, or you want to see it break below. And this all going to be entirely focused on definitely probably either the CPI or whatever Trump will have to say, because we all know that when he makes such announcements, he's probably going to talk about either a trade deal or a tariff. So it's one of the two things, because we all know that as of yesterday, the US and China were in talks, and probably, who knows, maybe they came to a decision on trade talks and things like that, and not that will be very, very crucial when it comes to the dollar itself. So the idea with the DXY is basically look for buys on the dollar. You want to buy the dollar above this zone if price breaks above, or you want to short the dollar when price breaks below this side here. So the simplest trick is that when you're trading with the DXY, it means that when the DXY is buying, when the DXY is buying, when the DXY is buying, we want to buy pairs that look like USD XXX. That's when the DXY is actually buying all these particular. So used as a gauge for some currency pairs like the Euro USD, GBP USD. When you find the dollar is strong, you want to buy pairs like GU, EU, NZD USD, and pairs in that format. Sorry, you want to sell these pairs. You want to buy pairs like USDJPY, USD CHF, USD NOK, USD. What else? USD ZAR. That's for the. Then when the DXY is selling, sorry, when the DXY is selling, when the DXY is selling, you want to sell those similar pairs, but then there are pairs that look this way. Can be XXX. Can be XXX. USD. Sorry. So now this is the kind of pairs that most of us trade, like Euro USD, Euro USD, GBP USD. When the DXY is actually selling, you want to be buying these pairs, meaning that the dollar is what? It's actually weak. When the DXY, the dollar is weak, you buy GU, you buy EU, you buy odd USD, you buy NZD USD. When the dollar is strong, you're going to sell GBP USD, sell Euro USD. We don't tend to include gold because gold tends to have sometimes breaks correlation with a dollar index pair. So now it's just the index itself. We want to have a general idea on what the index looks like in most cases when you're going into a trading day, because it can easily give you an idea on what you're going to be trading through the day. So when you come onto intraday time frames, or what you would expect in today's market from the side of the dollar index, now this will help us with pairs like GBP USD and Euro USD, USDJPY as well. When you're trying to look for ideas, so you can see that price left some demand levels below, just in case price to reject this level here. We can look at the possible areas it could come to as far as incredible possible targets we could have. So we have this demand level here that price has formed. So price can come to this area and then break above, and anything below this means price will be going back into the daily levels where we had we actually have no major levels below it, as you can see here. So this will be a possible target area. So in case you're looking to buy, you'd like to buy within this area or sell towards this area, depends whatever perspective you'd like to take, because there are always two participants in the market. But the best possible area to buy from, in my perspective, would be an area like this, because you can see there's a lot of accumulation where price does this and fails to break around this area, retested the first time, but then leaves you a demand level that is actually fresh. So price just taps into it, means it doesn't fully mitigate this area. So it's the best possible area that you would like to probably look for buys. I'm probably looking for dollar strength because I anticipate that later on in the day, Trump may most likely announce something like a trade deal or something of the kind that may come in to support the dollar itself. And of course, if that comes into play, we shall see the dollar pushing to the upside, meaning you'll be looking for you'll be looking for sales on pairs like GBP USD and Euro USD, NZD USD, and odd USD. And then on pairs like USDJPY, USD ZAR, USD MXN, or the Mexican peso, you'll be looking for buys alternatively. So just moving away from this, let's look a bit on some dollar pairs. Let's start with the Euro USD. I understand that this is a most traded currency pair as well. So let's just see what it has into store for us. So let me just get our proper template. Okay, so yeah, I think let's use this template. So This is a Euro USD. Let's start from a daily perspective and try to see what the Euro is up to. So yesterday we did have a bullish day come into play, but you can see that we have been in kind of like a bullish correction. As much as the trend has been bullish, but when price is moving like this, that means it's trying to correct. And why I would call this a correction is because we did see a shift from this side coming in over here. We saw that price was in a very long bullish trend, but from here the daily time frame happened to shift, and now price is in kind of like a retracement. So within that area, uh, price will probably be looking to, because price is losing momentum as we get towards this area, price probably looking to price lower and in anticipation of that dollar strength, right? Or the dollar strength. So this will try to align with my DXY analysis in that if the dollar becomes strong or Trump announces a trade deal, a proper trade deal, that means we would see this pair go to the downside, showing that dollar is strong, and the DXY will definitely buy to the upside. So as much as yesterday we had a bullish day, but we can see that today has now started bringing in a bearish momentum. If you go down to a 4-hour time frame, you're going to consequently see that the 4-hour itself had provided a shift to the downside. That our price now this shift came in from last week, and we saw price trying to come in to mitigate this shift yesterday over. Yesterday was the shift area we had on the 4-hour time frame, and then it provided us with a left shoulder on the same 4-hour time frame that price actually came in to retest yesterday. So you can see that left shoulder that price came in to retest. So what we're wanting to look at is our price probably breaks below this area, then retests back to this supply level, where you can now look at continue the sales through that day as well. So this is the supply level of interest we are going to be looking at, and this is the area below that we want to see price probably close below this area here, and this on a 4-hour time frame. Now below this, we can now go and try to look into refining our supply level that we'd want to see price come back into. So when you come around this and you try to refine it, the refinement may not be so large, but you can see this engulfing a candle, so you can always mark it out that level and see how best we can be able to see. So you can see price trying already to push back to its upside, and this time frame itself has provided a shift of its own nature, and this on the 30-minute time frame, still on the Euro US dollar. So we'd want to see something of this nature on the Euro USD. Price pushes to the supply level, and then consequently melts from that area to the downside. This would be the most ideal situation for us to try and look for selling opportunities. So automatically, of course, if price breaks above that level, what do we have above here? I don't really think. Okay, we have one more level above that price could possibly push to, but anything above this, I would definitely want to look for buys, because here we have a strong resistance. When you try to push this resistance level to this area over here, you can see that we have this resistance that price has been retesting multiple times: 1, 2, 3, 4, 5, 6, 7. So if price breaks above this area, these areas will be more insignificant. We'll want to see price push all the way to the upside to continue the uptrend as well. So it's very important to have a neutral bias when it comes to the market. You can have a bias for that day or where you'd expect a price to push towards to, but usually it's best to be flexible. You should have do's and don'ts. If market does this, I'll react this way. If the market doesn't do ABCD, then I'll react alternatively. Now that's very, very important when you're trying to navigate these financial markets. In most cases, it helps you to be fluid and flexible with the market in case sentiment happens to change. So besides that, the alternative for sales would be that price can actually not push to this upper side. Why? Price can actually push all the way below, because we do have a support level over here. So if price happens to break below the support level here, if it happens to break below, then price will alternatively just retrace into a supply level that will be formed around here, and that will usually be in the New York session, then to consequently push to the downside. Now, as far as targets are concerned, how far you'd expect a push to be, we can see price push all the way to the we call this a QM level. I'll have to call it a QM level, and this will definitely be my target. As price, if price happens to push way below these areas here, then of course a take profit one would be at open demand levels like this. Could be like a take profit one level that you'd want to see out, then probably take profit two, and then an overall take profit. Now that's as far as a Euro USD is concerned. So from this side, we can as well look at USDJPY, because it's a US dollar correlated pair. Now this is a bit of analysis that we have had from the other week. So we can see that price did push a bit to the upside into the zones we're looking at, and give us some bit of sell opportunities to that area there. Now let's just look at a reanalysis in terms of this USDJPY. So let's try to look at the weekly perspective to have an overview of what the week is looking like. So we can see that last week gave us a very bullish candle and had swept out all the liquidity on the other week's candle, which was this. Then this gave us the week to the downside, formed the low of the week, and pushed to the upside. So the first anticipation from candlestick anatomy is that the new week is going to first push to the downside, probably form a low of the week, and then push to the upside. And yeah, coming into now the daily time frame, we can see that so okay, we can see that price yesterday did push to the downside and gave us the strong rejection, and then consequently today it has given us a push all through this, then gave us the downside. So what area could have possibly led to this buy up over here? So when you look at this, we have a breakout. Let's first mark this breakout for a minute, and then you can be able to see this. Let's just zoom this in. So when you're looking at our pure price action on this area here, we can see it's a bearish candle, then bullish candles come in momentum and break above, meaning we do have a breakout at this particular level. So after a breakout, you'd anticipate a retracement, but to what possible levels now? As the price is pushing up with these momentum candles, we can see this kind of thing. It's called a double wick formation. But ideally, what happens is that there's always a hidden demand level on a lower time frame within these areas here. So we did see that price was able to push down. I think the area is more visible in the 1 hour. What happened that price, yesterday's price action was able to push towards this area here. You see this? So this was our breakout level that we were seeing on a daily. And you can see it's a good structural breakout. And below this, you can look at all these demand levels. Most of them had actually been mitigated. Apart, this was fresh. Then from here, price gave us a structural breakout. And then just before the breakout, there was this demand level that was fresh that price actually came to and tried to respect. So now moving forward from this, what are the best possible areas that we can see? So we are going to price probably try to retrace back to these areas. Why? Because price did leave us with another demand level right over here that is fresh and mitigated, and it's fresh and unmitigated, right? So if price happens to break below this area, we would like to take some buy opportunities from here. And just in case the current intermediate demand level holds price, as you can see this over here, why I'm not so comfortable with this one is because there is one just above the supply level, just above this demand level. So what happens in most cases, price can use this supply level here to push to this this demand level to push price to push all the way to the supply level, to use the demand to push to this supply level over here. And then from this supply level, it can actually push lower into this extreme demand level, and then later on buy to the upside. Now this is something I would really love to watch personally, or it's something I would really love to anticipate. If price to the supply level, to push to this area and then consequently push to the upside, right? Now this will be something very amazing. So of course, when price comes onto this, you want to either refine this demand level or look for a confirmation pattern. That's if you have one that you tend to use, or wait for a confirmation candlestick if you're a person who trades candlestick patterns. Now, this is the best ideal scenario that we'd love to watch, but of course, the market can do whatever it wants to do. Now, alternatively, what would happen? What would happen is that price can easily use this demand level in case it happens to pick up enough liquidity to come and break above this resistance. And of course, if price breaks above this resistance, you all know that we just wait for a retracement back into these areas and then push to the upside. Now, these are the possible areas where we can look for buying scenarios through the day. Worst case scenario is our price definitely comes in and breaks below this demand level. Then of course you'd expect a small retracement from these areas here, and then a push to the extreme levels over here. So the extreme level, what would be our extreme level here? Let me see what's our freshest demand level below. So our freshest demand level would definitely be this, but I'll tend to mark it on what would be the QM level. So yeah, we can possibly see something like this in case price happens to break below that demand level. So this what would possibly be like. Then of course above here, price can break above the resistance, retest the areas, or give us a retracement or correction move, and consequently push to the upside. Now these are the alternatives you can be able to use. Now why the alternatives is because these are supposed to just aid you when you're doing your analysis. It's not a must for you to take the trades the way they are. You can just be able to compare these. And why they're given in a neutral format is because when price gets there, you're able to make a decision based on what the market is actually doing. It's not a must be like, you know what, for me when price comes here, I must buy, I must buy. Price would get to one area, fail to confirm, and consequently sell, because you know the market will do what it needs to do in most cases. It's not a must for it actually move in certain directions because you want it to. So that's USDJPY. So in the meantime, in case you have any questions, you can kindly put them in the comment section. I'll be able to get to them towards the end of today's session. Uh, in the meantime, let's continue with the analysis. So let's look a bit at one more US dollar pair. I think, let me see. That's USDJPY. Not, yeah, let's look at gold. Then you can go into a bit more of cross up pairs as well. Let's go into gold. So what template should I use? No. So I'm trying to look for the best possible template. So you can also let me know what your favorite template is. That's you're comfortable with. Personally, I get hard time with templates. So I just keep playing with them in most cases. The template I'm looking for, but I just don't seem to get it. Let me just try one more. Okay, this is getting bad. So let's look at it this way. Okay, let's use this. All right, so now this is gold, everyone's favorite pair usually. So let's look at it from the daily time frame first. So as we can see, our price is pushing aggressively away from a daily demand level, which is a very good sign. So it's a daily demand level that price has been mitigating in the meantime, and you can see when you come to a 1 hour time frame how price was able to provide a very beautiful confirmation on these gold trades. Right now, what we want to look for is going to be basically just continuation trades, because we did see price came into this demand level and pushed all the way to so there was this gap that price had formed, and we all knew, I believe Robert has been mentioning about this gap for quite a long time on his market snapshot as well. Even on the X space, he did mention about how gold is most likely going to come back and fill up this gap. And as you can see, the gap was right in a daily demand level, which is beautiful. So you could have refined to this demand level because it did have to this gap because it had a demand level right below it. So price comes, fills the gap, and then goes to the demand level beautifully. Then what happens? Thereafter, price provides us with a good market structure shift that is more like a confirmation on the buy areas that was right over there. Then later on, it obviously retraces, and we have spoken about this quite a number of times uh, on how price will always tend to use the Fibonacci tool levels. And for those of you who have been in some of the sessions I've conducted in terms of the mentorship and free classes, I've told you about the significance of using a Fibonacci tool and how it can always get you the best possible areas. So you can set price beautifully retraced back into these fib levels. And when you refine on a way lower time frame, you're able to find there what some would call a head and shoulder pattern, or alternatively, you're able to find here what I love to call the QM level. So that was how price pushed out. So right now we want to see how far or what the target possibly could be and how best we can be able to engage or to look for those continuation trades as price continues. So what we'd love to see personally, in order to be able to get the best possible demand levels, is that once first see how far price is most likely going to push towards. So what I'm looking at is that price is most likely going to push towards the next daily supply level. Of course, I anticipate price may not most likely break it. I wouldn't say that because we have no idea what Trump is going to announce. But if Trump happens to announce a trade deal, most importantly with China, we're going to see the dollar, the gold push all the way to the downside, all the way to this next demand level that is way down here. But if his announcement is far from that or involves anything like increase in tariffs, price is most likely going to break above this. Now, this is why trading gold, especially in the Trump regime, is supposed to be a bit more aligned with the macroeconomics or what's going on in the the physical world. So anyway, other than that, we can say that supply level above here, that price could most likely want to push towards to. So our target would be on this 4-hour area that you would want to watch out for, just in case. This would be your target area for anyone who's in the buy or is going to look for intraday buys. We would like to target this area over here. Why this area? There is this double wick formation right before the breakout once again. That means on a lower time frame, we are going to find here a supply level, right? Now, coming on how best you can possibly position yourself to try and push buys to that area there, we're able to look at how price is pushing from here. So price currently is respecting the supply level, and the question is how far down do you expect a retracement to occur? So usually I would expect a deep retracement in these particular levels. I'll be honest, because I always like trading either in hidden supply and demand levels, support and resistance levels of this nature here. Yeah, so I'll be more comfortable taking a trade or a buy trade within, if price retraces this far, I can always just use my fib tool to try and see if there's any kind of significance there. And of course, if I mark it out this way, I do see that my SNR level is between the 62 and 79. So what I'm anticipating is that going into London session, our price can retrace all the way down here and then push to the upside later on in the New York session, hopefully before Trump gives his speech. So Trump's speech will be at 11 p.m. anyway. So I would want to see something like this. That's what I would love to see. So now you should be very comfortable and be able to know that there's a difference between what you would love to see and what the market will actually do, right? So that's why it's always best to be able to react to the market. So what we'd want to see on these scenarios here, alternatively, I always give an ultimatum because the market will always do what it wants to do. Alternatively, personally, what I'm seeing here is a very beautiful resistance level like this. Price can decide to give us a slight retracement, possibly into these hidden levels that are there's a by the way levels. I don't love trading them, but there's by the way level. So you can see price alternatively push to that area, then come and break above that trend line. Alternatively, we can have this because this range is really so big. The range here is so big. Sometimes price will only respect the 50% of the range. I believe this area may be almost around the 50% of the range. So you can see that around the 50% of the range. But with this area, what happens is that you won't want to take a trade off this area. What you would want to do is that if price respects that level there, you'd want it now to first break above this trend line. You see that? You'd want it to break above that trend line and then definitely retest this trend line level here and push to that supply level right above. Now, in terms of what we want to look for sales, the idea would be simple. If definitely our price gets to these 4-hour supply levels, so you can realize that we have two consequent supply levels above here. So the idea behind these two consequent levels is that you never know which one price is going to use unless price comes with very high momentum. Then you can be able to wait in for a confirmation. So what happens with these levels is that you don't want to take a sell within these areas. You want to wait only for price to get into them and definitely now change direction officially on a relatively high time frame. Could be a 30-minute time frame, could be a 1-hour time frame. It's what you love to do. But other than that, as far as price is above these areas here or this demand level, I'll still be looking for buy opportunities. Sell opportunities will come in around these areas strictly upon confirmation. You would want to see a market structure shift, definitely on something like a 1-hour time frame or a 30-minute at worst. At worst, that's worst case scenario. You'd want something of that nature there. Retrace back in, then push all the way to the downside. Now, this as far as gold, and this is what we'd really love to see going forward, right? There are always alternative opportunities on how you can go it. So because the bias is bullish entirely, we look for two bullish opportunities or two ways we can look for the bulls, but then consequently we look for two areas that price could possibly sell from, or two possible ways price could sell. So I'll say the buy areas. One, price pushes to this area, breaks the trend line, then retests and pushes to the upside. Two, price retraces all the way to these levels here. So you can as well mark just the demand level if you wish. If you're going to the confirmation trade, price pushes all the way down here, then pushes to the supply level as well. Those are the two buying alternatives you want to look at. Then in case of sell opportunity, sell whatever the sell side comes into play, we push all the way break below this level here or this demand level, retest, then push to the downside too. We come into this 4-hour supply levels, and then price offers you a consequent confirmation for for the sells. So it's two ways, it's a two-way ultimatum. It helps you to be safe and protects your bias as well. One of the things you realize when you trade over a period of time is that whenever you fixate your mind on a trade you want to take, if you say that today I want to be bullish, and let's just say something happens in the market and all of a sudden the market is bearish, but you come to be bullish, your brain will just tend to force you to take bullish trades. Alternatively, you may be a very good trader, but you won't be able to see. It will be hard for you to see that, you know what, the market is not giving me buying opportunities, it's only giving me a selling opportunity. It will be very, very hard for you to look for a fair balance between the two. Now, moving forward, let's first drift away from anything to do with the dollar, and we look at our friends from the Asian session, and of course the British guys as well. So this GBPJPY. Now let's start again from the daily time frame, just to have a perspective on what the market is actually doing. So if you realize the structure here would tend to be slightly similar to what we are seeing on USDJPY in terms of the current price action, right? So you realize you have a bearish candle, then price comes through and gives us a breakout from here. You see this? Gives us this breakout from here. Two bullish momentum candles. Now I told you that usually when price gives us these breakouts, we're having this area here that you can see. Two bullish momentum candles, we have this hidden area here, right? Of course, it now tries to encroach slightly a bit out of the breakout area, but when you come to the 1 hour time frame, you can always be able to refine that hidden demand level there. So let's just look at this. So when you look at this, this was the breakout area, right? Just do a chart show from here and take off my auto scroll there. There you go. So you can see what's the breakout area, and there's this whole structural breakout. So you see this whole structural breakout, this is the high and this is the low price formed, right? So you see that. So within these levels, yeah, this the lowest point formed, price tries to consolidate, then breaks above. Then you have what they call the, could be the left shoulder or whatsoever. I tend to call it the QM or the Quasimodo level. So I believe if I got the 4 hour, you can be able to see a good demand level here, right? In the 4, you can see a very nice demand level that price formed over there. But of course, upon refinement is where you come on with these other zones over here that we can see price formed. So me personally, I like taking that left shoulder entry. Of course, your stop loss will always be a few pips below that area there. So I don't know if you're seeing the similarities on how price is tending to push to the upside that similar way, right? So now, anyway, right now, what would you expect? What kind of reaction would you expect in these particular levels? So let's first see below this if there are any other potential areas price could push to. So if we look at this, if price breaks below this level here, of course, we'd anticipate a retracement, then a push to the downside, all the way to this demand level, because it hadn't fully been mitigated. As you can see, price barely just taps into it, meaning this level is still partially fresh. So in more advanced trading, they call this a preserved area or liquidity preservation. For guys who do a bit of smart money concepts or liquidity concepts, price will just tap into like a 5% of an area, and then consequently now impulsively push to the upside, but usually it has preserved this area for future use. So if price shifts later on, it comes and mitigates the minimum levels of liquidity, then pushes to the upside. But that's a story for another day. So what we are seeing here is that prices come with high momentum. Now usually high momentum is not very, very good. Why? Because it shows that the sellers are really in control. And usually when I see high momentum, I tend to not take these areas. Even if price is giving us a very good range on a lower time frame that price could buy to, I tend to be more skeptical with these areas. So what we'd want to look at, we'd want to see, let's say, what time frame gives us a proper structure. So of course, okay, that 15 has given us a very beautiful structure that can probably facilitate a retracement, right? So what we'd want to see is that if you're looking for the buys, would love price to come into this demand level here, then definitely give you a lower time frame confirmation. That could possibly be 3 minute time frame. The 3 minute time frame, you tend to see a shift within this area, then price can majestically push and fill up all this gap, definitely to this supply level. But because this bias we're having, the general bias is bullish, the supply levels are just for you to watch in most cases. Because in a bullish scenario or in a bullish market, you have no reason trading a supply level because it will give you selling opportunities that will be less significant. So you want to focus more on demand levels and then break out of supply levels. When price breaks above a supply level, that becomes a supply to demand flip or support to resistance level that price can probably use in the future or after breaking out. Now, it's something you like to keep in mind a lot. But consequently, this will be the buying area I would want to watch out. We have no hidden tricks in terms of buys within this particular price action. It's one-way traffic. If price comes in here, gives you a lower confirmation, then you definitely want to take the buying opportunities. But if price comes in, because of the momentum we have seen here and breaks below it, you'd wait for just a retest of this area here. Remember, this was a demand level, right? When price breaks below demand, becomes probably a demand to supply flip or a support resistance flip. Price will definitely retest and push further to the downside. These are things you'd want to watch around when you're trading pairs that can easily get this kind of momentum. This is very crazy, very crazy momentum. So that's GBPJPY. So let's look, I think, at one more currency pair here. What do I have? I have GBPNZD. So I do have GBPNZD over here. I think we're using this. Yeah, this is quite fair. Once again, I would like to remind you, if you have any questions, you can kindly put them in the comment section. When you're done with the analysis in a bit, we shall look at your questions and try to get them answered as well. Where's my chat sheet going to? All right, so looking at GBPNZD, this the New Zealand dollar and the Great British Pound. So we're really seeing price push to the downside with a lot of momentum. So now looking at the line chart, what do we see here? So price did shift from here and it's trying to push the downside. So the momentum is very bearish. What would want to look for in the downside perspective are areas where price could possibly give us reactions or take profit levels, right? They're not levels you really like to take a buying trade from, not necessarily unless price gets to probably this demand level, because the demand level below here is actually very fresh. It's fresh and tapped. And remember, it's on a daily time frame. That means within a move to this area, there can be some very pretty interesting opportunities. So first of all, we can start price. The momentum is still so high, but price has just broken below our support level. That was this area over here. So you see price had difficulty breaking below this area here, but then it breaks below, comes to retest this area or a supply level. That means price leaves us a new supply level over here. As I told you, this was our support. Price breaks below, it becomes a resistance, but price leaves us a supply level we'd love to watch. So what we'd really love to see is price probably push up to the supply level, then push to the downside and targeting this particular area over here. That would be ideal as far as GBPNZD is concerned, because they do have an area to the downside that would really love to push price towards. And you can see that on the higher time frame, this pair is very bearish. So do not look for anything beyond those bears. You want to just play along with that trend, because then it will give you the best possible trade ideas or even a win rate at the end of the day. So drifting away from this, let's look at one more currency pair. Then we probably let's look at an index. Then we shall definitely dive down to your questions. So let's look at this. Let's look at NASDAQ. Right now is not the best time in most cases to trade some of these synthetics, especially when Trump is going to speak today. That will be very tricky, because the stock markets, they listen to the guy, they pay attention to him. He's like their either arch enemy number one or they are good or something of that kind. So yeah, Trump is very significant to this guy's markets a lot. So you can see that price try to break out of this area, try to push to the upside. It was in a bit of a correction move. We had a breakout here, price retested it, and price is failing to close above this area strongly on the daily time frame. So we did have a high bullish momentum candle, but then you can see price is tending to lose momentum right above this high over here, and has failed to close above the high. So what do you want on lower time frames if we are to be let's say bullish or bearish on this particular pair? So coming to our 1 hour time frame, you realize price happens to look like it's shifting, but there are very, very many demand levels going from there, right? So with these many demand levels, what you like to see to be on the safe side, what you'd want to do to be on the safe side is definitely to wait for price to break below this last area here. Then you can be able to look. Then you can be able to look for sales beyond this level. But other than that, because of this kind of price action, you realize that there's a 4-hour demand level that's holding price. You see that? And what you want to see is now this demand level probably push price to the upside because we are a bit bullish for the meantime on this index, especially if Trump comes in later in the day and announces a good trade deal. You know, these markets love Trump. They love a deal. They always love a deal. So a break above this level, you look for those buys. They'll be very productive buys. Definitely, if price breaks above and retests that area or retraces back. Now, I've been speaking about the retest and the retracement. Here's the difference. When price breaks above and it's retesting, a retest will come direct to this and new support level, right? Becomes as a resistance support flip. It was resistance, price breaks above, becomes support. Now, this is a retest. Now, sometimes price will break out, then correct. Now, when price is correcting, this is what it will look like. It will be more of like a retracement. Price will give us this kind of price action. Now, usually with a retracement, price won't respect this flip level. It will just push down into these areas here, right? Now, we tend to call this an area of liquidity. This area is here from that breakout level to this area. This is more what a retracement would look like. So price does two things when it breaks out or it gives us a new structure. It either retests or retraces back into these levels. So that's the difference between the two. So now this whole move to the downside will be more of a correction. Price breaks out and corrects or retraces. But the first move, price retests. It's retesting this new support level that was previously resistance. So that's the idea we're having on US 100. It's a pair that I think I would love to trade through that day. Personally, I would love to take a trade on this pair today. I'll be watching it through that day. So besides that, I think I can dive into a bit of your questions and queries, and then we can see what the market has for us today, especially going into that New York session, and see what Trump will have to tell us later in the day. So your questions, then we can get into them and probably call it a morning. All right, so a shout out to Robert once again, he was the first in the session, as well to people like Alfred. Thanks for tuning in. So I'm just waiting to display display the questions in a minute. So we did speak about we spoke about gold earlier on. So let's look at GBPUSD, and that's from Manuel. Good morning to you wherever you're tuned in. Let's see what we have on GBPUSD as you have requested. All right, so let's have this. So it's GBPUSD. Let's look at the daily time frame. Wow, this is beautiful. So what you can see is our price has been able to push all the way to a demand level. And what I love with this kind of price action in most cases that in case a demand level doesn't give you a confirmation or it fails to hold price, we have a very beautiful range to the downside. That means shall see price selling for some time. But in the meantime, we have to deal with the demand level first. So price is currently rejecting a good demand level. And yeah, what you'd want to see to do is provide probably a low time frame confirmation. So usually when you're good with trading at these kinds of levels, these kinds of levels, in most cases, you can just be able to. Okay, let's look at this. So I talked about the QM level. So you can see price came all the way to this QM level. You could call it a left shoulder if you want to. So what happens here is that there are two ways of taking a confirmation on this kind of trade. One, you'd like to see this candle close bullish, then you can drop to a lower time frame, see if there are some kinds of demand levels price formed, and then you can be able to take it up from there. So of course this range is very, very big to the upside. So I'd really love to see price retrace later in the day, probably to this kind of demand level over here. But the range up the upside is so big. This range is so big. So I believe price is going to push all the way up here before the Trump speech. I believe price most likely going to do this all the way up here before the Trump speech, because I'm expecting that it to be bearish, and you can see this whole move. So I believe price most likely going to retrace this move first, then later on it will come and break to the downside. This is just my perspective. When you look at the 4-hour time frame, we did see a shift from here, and then price came back in after that shift, pushed to the downside, has another breakout. So we'd love to see this for a close bearish, a retracement back to this area here. Of course, we're having a rejection of a demand level, but the bias will remain bearish in my perspective. Why I expect this pairs to correct now, especially with Trump, I believe his deal may come in and may be timely, right? That's my own perspective. I believe it will be timely. FBPCHF, I don't understand FBPCHF, but what I know is we do have, so okay, my perspective, my general perspective on GBPUSD, a retracement to this area, then a push to the downside below this area. So anything above this area here, there will be a trend line formed, of course. In terms of buys, you'd want to see price break around above this area here, then push to the upside. But I believe price going to retrace to this area, then push lower. That's my perspective as far as GBPUSD is concerned. And just on the other hand, you can see that to the upside, we do have that beautiful breakout. So the retracement is a bit more, makes more sense to this area, then push to the downside as well. And you can see it aligns with the supply level. So this GBPUSD. So someone asks Smith FX. You did ask for GBP or CHF. For those of you that are new to the pair, this means the Great British Pound and the Swiss franc. So the Swiss franc is a major currency because Switzerland has some of the best tax policies. So when you're making your research sometime on YouTube, you realize that someone probably on YouTube will tell you most billionaires or millionaires do hold very many accounts or have large holdings in Switzerland because they have the best tax policies. So that's why it's a major currency, even in the financial markets. So, and now coming down to GBPCHF, what do we have? Okay, and these are called cross pairs in most cases because there is a minor currency and a major currency. So we do see a consolidation. This is a very bad consolidation. So what would you like to do to be safe in these areas? What would be the best possible approach to this kind of price actions? So what I would see on this, okay, yeah, so I'm saying something. So we could see something like that. Then we could see something coming all the way from down. We do have that breakout. So why I would have this, because when you look at this area alone, we have some kind of like triangle, right? So I don't really trade these patterns, but when they make sense, they're always good to pay attention to. You just align them with your price action, right? So you're seeing this bearish momentum coming in, and below over here, we are seeing a demand level. So when you're building a narrative, what we'd love to see is price to push all the way to this demand level, most definitely. Then probably look for buys from there, or even just break below it, retest and then push to the downside. But in the meantime, we're saying today is a very bearish day. Price has engulfed yesterday's the previous day's candle, which was yesterday, coming down into smaller time frames or low time frame perspective. Okay, this momentum was really very crazy. It was very crazy momentum. So we can even refine our trend line on a lower time frame as far as looking for opportunities through that day. You see this? Very, very nice, very, very beautiful price action there. Then you can see as a consolidation, and then price leaves at a nice supply level. So now we have this supply level, which will be our extreme selling point, best possible selling point. But then along this, one thing you need to pay attention to are the areas where price breaks out. So you can see here we have this area. When I put a line chart, you can see rejection, 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 break below. So you can always expand this demand level and use this as a whole, supply level as a whole supply level, where you'd want to take selling opportunities. So anticipate a retracement, and what's going to facilitate a retracement? It has to be a demand level. And what do you see here? Price around the demand level, right? So price rejects this demand level, probably retraces to the upside, then pushes to the downside, right? Anything below this, would expect one or two things. We'd expect a direct, would expect a direct retracement. So let me just send this shortly. So here I would expect one or two things as I explained earlier. Breakout, retest, push, breakout, correction or retracement into these areas, push to the downside, right? But this is my perspective on the Great British Pound and the Swiss franc. What time is Trump going to give his speech? So East African time, 11 p.m. Yeah, it's that late, which will be good because most of us will be out of our trading days, so we shall be able to price in his news tomorrow. So I think one more question, and we call it a day. If there's any other question, what's your view on USDJPY? So we did look at USDJPY already, and these were our perspectives. We say that price would like to look for buys in specific zones. So this area is supporting zone. So don't mind this area supporting zone that price would like to push from to this whole supply level, or you can call it a resistance level. Then push to this area where I would really love to buy from. We really love to buy from this area. Price pushes to the upside, but we said in case price breaks below, we'd wait for a retracement or a retest. Then price pushes down, or if not, price can just say to come buy from this area, break above, or even buy from this area where it is, breaks above, then either does the retest or the retracement to continue the buys. These are the alternatives. Remember, we spoke about the ultimatum. You should always have different scenarios in case price doesn't do what you would really love to do. So that would be it. So other than that, I really love to thank you guys for tuning in, and thanks for the questions. Thanks for being engaged as well. I would like to remind you that at FX Pesa we do offer a variety of goods, goods or services, whichever it is, from free classes, both online and physical. The links are always in the description, and we do have some of the best and competitive spreads: gold, oil, and NASDAQ 100, oil, NASDAQ. I should feel free to check them out. If you haven't created your account, kindly do. An account manager will reach out to you and give you a variety of the commodities we do offer. And once again, on our YouTube channel, we do have amazing podcasts for you with a bullish banter, very amazing guests with very insightful stories that could definitely help you in your trading journeys as well. So feel free to check that out as well. As far as Uganda is concerned, we have a couple of events that are lined up for you guys on the 25th. And Kenya, the same, I believe. There will be something with some of the universities there. I think United States International University, there will be something going on. Tanzania, you'll be having a masterclass coming up as well. So feel free to check out in all those different locations. So until next time, peace and love. We meet again. I wish you guys a blessed trading day.